Your call cannot be completed as dialed. Please check the number and dial again.
129T.
Your call can... Please check the number and dial again.
Your call cannot be completed.
Your call cannot be completed as dialed. Please check the...
Welcome to the conferencing center. At any time during this message, if you need technical assistance during your call, press *0. There are 7 parties in conference, including you.
Hello, everyone on the line. We will be taking roll at 10 a.m., so we have about 6 minutes to go.
Okay, good morning. Can everybody hear me?
Yes, good morning.
Good morning. Perfect. Sorry about that. We'll do this again. This is Claudia Lopez with the Office of Tax Appeals, and we are about to begin the telephonic hearing of Gkhalsa, Inc. I would like to confirm that all participants are on the line, starting with the taxpayer's representative, Mr. Taharan.
Good morning, Claudia.
Good morning. Thank you. Now for respondent, the Department of Tax and Fee Administration, Ms. Renati.
Present.
Mr. Parker.
I'm here.
And we have Mr. Brooks.
I'm present.
Okay, now for our panel, we have Judge. We have Judge Aldrich,
Present.
Judge Cho,
Here.
and Judge Long.
Here.
Okay, thank you all for joining us, and we are ready to begin the hearing.
Good morning. This is Judge Aldrich speaking. I will state my name each time that I speak, and I ask you to identify yourself each time you speak. Because of ongoing concerns pertaining to the coronavirus, or COVID-19, and consistent with the Governor's Executive Order N2520, the Office of Tax Appeals has decided that it is in the public's best interest to move the Office of Tax Appeals May calendar to telephonic hearings. We are holding these hearings telephonically with the agreement of both the taxpayer and the agency's representatives, and this change will not impact the fair and objective hearings of the tax appeals. This hearing is being conducted entirely electronically. All participants, including the administrative law judges, are dialing into this hearing. The audio will be live streamed to the public, and a stenographer will transcribe the audio of the hearing. Our stenographer, Ms. Alonso, is using her equipment to take down everything that is being said on the record. To help us make a clear record that can be easily understood when read, I ask the following. Begin any statement by stating your name. Speak slowly and clearly into the microphone. Please do not interrupt when someone else is speaking. It's common courtesy, and it's easier for Ms. Alonso to perform her work. And please do not engage in casual conversation. If a comment can be heard through the microphone, Ms. Alonso will report it. If Ms. Alonso cannot hear, understand, or identify someone, she has permission to interrupt at any time. As a quick point of clarification, we are the Office of Tax Appeals. We're a separate agency from other departments charged with administering tax programs. I'm the lead administrative law judge for purposes of conducting the hearing. I'm joined by Judges Keith Long and Daniel Cho. While I am the lead for purposes of conducting this hearing, we three will deliberate and decide all the issues presented. Each of us will have an equal vote in those deliberations. So I'm going to be opening the record. We are opening the record in the appeal of Gkhalsa, Inc., doing business as Circle K, before the Office of Tax Appeals, case number 190345559. This hearing is being convened telephonically on May 19th, 2020 at 10 a.m. The hearing location was scheduled for Cerritos, California. And should you experience any connectivity issues, please try to reconnect as soon as possible. So please state your appearances, starting with the appellant or his representatives. In other words, who you are and who you are representing.
Good morning, Your Honor. James Taharan for the appellant.
Thank you. And for the department?
My name is Lisa Renati. I'm a hearing representative for the department. With me today are Chris Brooks, tax counsel, and Jason Parker, chief of headquarters operations.
Thank you. This is Judge Aldrich. The issue before us is whether any additional reduction to the amount of unreported taxable sales based on the markup method is warranted. Is this correct, Mr. Taharan?
Yes, it is, Your Honor.
And department?
Correct.
Thank you. Pursuant to the May 1st, 2020 minutes and orders, we admitted Exhibits 1 through 19 for appellant and Exhibits A through E for the department. These exhibits were admitted without objection. On May 14th, 2020, Mr. Taharan emailed Ms. Lopez and carbon copied or CC'd the department with a request to admit an additional exhibit. The proposed exhibit is marked for identification purposes as Exhibit 20. Proposed Exhibit 20 is 4 pages long, including the cover sheet, and is purported to be correspondence from the IRS to appellant regarding the 2014 and 2015 tax years. Is this accurate, Mr. Tehran?
Yes, it is, Your Honor.
And for what purpose are you offering Exhibit 20, proposed Exhibit 20?
Just to offer the accuracy of the records for the taxpayer.
Okay. And does the department have any objection to admitting proposed Exhibit 20?
We have no objection.
Okay. Would the department require a post-hearing brief to be submitted with a limited scope of addressing Exhibit 20?
No, we do not.
Okay, thank you. In the minutes and orders, I indicated that the time estimates would be as follows. Appellant, you will present your opening argument or statement, which I estimated at 30 minutes. Then department will have a combined opening and closing statement for approximately 20 minutes, and then appellant will have 10 minutes to close or rebut. Mr. Tehran, are you ready to begin with your opening statement?
Yes, I am.
Please proceed when you're ready.
Good morning, Your Honor. James Tehran for the appellant.
If I could
My
just
opening
interject,
statement today has 5
hold that.
sections.
I failed to admit Exhibit 20 into the record, so I'm going to move that into the record as admitted. Sorry to interrupt you, Mr. Tehran. Please proceed again.
Good morning. Again, my name is James Tehran for the appellant. My opening statement today has 5 sections, and it goes through the exhibits sequentially. Section 1, Introductory Facts. The appellant, hereinafter taxpayer, is a franchisee of the Circle K convenience stores. Taxpayer operated 3 Circle K stores during the audit period. Taxpayer was audited by the California Department of Tax and Fee Administration, hereinafter department, for the tax period April 1, 2012 to March 31st, 2015. A tax liability of $91,267.74 plus interest was assessed on or about July 6, 2016. See Exhibit 1. Taxpayer uses Radiant point-of-sale system, hereinafter POS. Radiant is made by National Cash Register, or NCR, a leading manufacturer of POS systems for convenience stores. Taxpayer uses a barcode reader to scan products it sells. Over 99% of products in the store have a barcode. See Exhibit 2. Products are either taxable or non-taxable. Non-taxable products usually have larger profit margin than taxable products. This is true not only in the taxpayer's business, but also in all convenience stores. One notable exception is sale of California Lotto lottery, which typically has 5 to 7% margin. The products are scanned at the point of sales. The POS system will then capture what is taxable and what is not taxable. The POS system captures every single transaction, ticket by ticket. Taxpayer uses an outside CPA firm to prepare the sales tax returns. Taxpayer prints a sales report generated by the POS system and gives it to the CPA. The report shows the total sales and what is not taxable. See Exhibit 3. Collected sales taxes were reimbursed to the department. Section 2, Audit Manual and Process. Audit Manual, hereinafter AM 404.05 states, quote, auditor's function is to determine whether correct amount of tax has been reported, end quote. 2 approaches are discussed in AM 404.05. One is direct approach and the other is indirect approach. The indirect approach is applied when, quote, reliance cannot be placed upon the formal account, end quote. See Exhibit 4. Here, the formal account would have been taxpayers' POS records. AM 405.20 allows for two categories of testing. The preferred method is statistical sampling, and the other method is block sampling. The block sampling assumes, quote, that differences disclosed in the test period, which are audited in detail, will occur in the same proportion in the balance of the audit period, end quote. AM 405.20 subsection A further places three conditions before block sampling is used. 1, units of sales and items of claim deductions are uniform throughout the audit period. 2, basic characteristics of business remains the same throughout the audit period, and if not, a separate test should be made for each specific period. 3, sample must contain sufficient items. See Exhibit 5. AM 405.20 subsection K cautions that, quote, auditor must be alert to indications that projection of sample results is possibly unreasonable. If the results appear unreasonable, the auditor and taxpayers should come to some agreement as to whether or not the results are representative of the business for the time period in question. See Exhibit 6. Standard of evidence is preponderance of evidence. AM 101.22 defines the standard as, quote, such evidence as when weighed with that opposed to it has more convincing force and the greater probability of truth, end quote. See Exhibit 7. Section 3, Department's work papers, flaws and non-compliances. The audit period covered 3 years or 36 months. When you consider it had 3 stores, the population expands to over 100 months of sales and records. The auditor examined 2 incomplete months, or less than 2% of the records. We believe this is contrary to AM 405.20 subsection A addressed earlier. Department's work schedule 414M shows taxable percentage to be 54.5% for the first 4 quarters and 67.25% for the next quarters. Yet, no data was tested for the first 4 quarters. We believe this is contrary to AM 405.20 addressed earlier, the Exhibit 8. The auditor's purchase segregation for November 2014 and December 2014 was $58,108 and $71,562, respectively. The December purchases were higher by 23.15%, yet no inquiry was made and no explanation was noted in the work papers. Nevertheless, the auditor proceeded with her analyses and projection of error percentage. This again is contrary to AM 405.20 subsection A, the Exhibit 9. Observation test, a popular mechanism for the department, was not conducted. Auditor made no attempt or inquiry into the taxpayer's POS system. The POS system has a barcode reader, yet no inquiry or observation is noted. The POS system tracks every single ticket, every single transaction, ticket by ticket. No inquiry or observation was made. The audit supervisor, upon reviewing the record, agreed that a re-audit was warranted. Her decision was primarily based on disparity in purchase segregation. See Exhibit 10. The re-audit was conducted by a different auditor assigned by the audit supervisor. Unlike the original audit where 2 incomplete months were tested, 3 quarters were tested. All 3 quarters were within margin of error. See Exhibit 11. If these 3 quarters were the test basis, the result of the audit would have been a no-change audit. Department, rather than accepting the re-audit results, decided to average it. This would make as much sense as a teacher incorrectly give you a score of 50, and when you bring the error to his or her attention, offers to average it rather than correcting the mistake. We offered to test more quarters, but they declined to review. The Exhibit 12. As stated earlier, the taxable ratios during the first 4 quarters of the audit period were lower than the remaining audit period. One reason is that petitioner was an approved woman, infant, and children, commonly known as the WIC or WIC vendor. These items, when sold to WIC recipients, are tax-free. The department declined to make appropriate adjustments. See Exhibit 13. The audit period started in 2012. That's 8 years ago. Back then, not everyone had a cell phone, especially among lower economic class in taxpayers' market. As a result, phone calls were a prevalent form of communication, and majority were purchased from convenience stores. Phone calls were also exempt from sales tax. This was a common knowledge, especially among experienced sales tax auditors. Yet, auditor failed to make any allowance for it when it projected the test results over the audit period. Section 4, Department's position. Department will assert the following. 1, the POS system is unreliable. They will keep on telling you that the POS system is unreliable, yet in pages after pages of the report, they never once said what type of POS system taxpayer has. They never asked the taxpayer how it works. They never asked to see a report it generates. They could have easily looked at one day of sales, ticket by ticket, and analyzed it, but they didn't. They could have conducted a day or a half a day of observation, but they didn't. They even admitted that second quarter 2014 records were accurate in their May 10, 2019 report. How could the POS be so unreliable, yet admit that its reports for 1 quarter match with purchase segregation? The Exhibit 14. Department will attempt to substantiate their reasoning why the POS is unreliable by simply multiplying total sales by tax rate and ignoring the fact that total sales includes non-taxable sales. The caption under a schedule clearly reads total sales per POS. It does not read total taxable sales per POS. The Exhibit 15. Had the department clearly studied the report and subtract non-taxable sales, they would have realized that there are no differences as suggested by the department. See Exhibit 16. They will assert that POS markup is substantially higher than shelf test markup. For POS system to correctly calculate markup, it must enter the inventory cost for each item purchased. Taxpayer never claimed that they enter inventory cost in the system. Frankly, it should have been obvious to the department, as nobody has that much markup, absent getting their merchandise for free. The Exhibit 17. Furthermore, the department's unreliability argument is made after the fact. There is nothing in the original report to substantiate unreliability other than saying it was unreliable. They never even mentioned that POS system has a barcode reader. 2, department will argue the cost of goods is inaccurate. 3 quarters were agreed to by the audit supervisor and tested during the re-audit. The differences between taxable purchases and taxable sales reported are as follows. For second quarter 2014, taxable purchases and taxable sales reported were 72.76% and 69.30%. For fourth quarter 2014, taxable purchases and taxable sales reported were 74.52% and 72.33%. For second quarter 2018, taxable purchases and taxable sales reported were 76.09% and 73.54%, respectively. The average for the three quarters were 74.46% for taxable purchases tested and 71.72% for taxable sales reported. The average taxable sales reported is 96.32% of taxable products purchased. It should be noted that taxable sales reported would never equal with taxable purchases for convenience stores due to 1, theft or shrinkage, 2, personal consumption, 3, timing differences, and 4, non-taxable sales usually have higher profit margin, which lead to lower taxable percentage. In order to better understand the impact of markup on ratios, assume that you purchase two items for $1 each. One is taxable and the other is non-taxable. In this scenario, the taxable purchases would be 50% of total purchases. Now further assume that taxable item is sold for $2 and non-taxable item is sold for $3. Total sales would have been $5. Although taxable purchases was 50% in this hypothetical, the taxable sales was only $2 or 40%. Nevertheless, taxable purchases are within margin of error for the three quarters tested, and that margin of error was at least admitted to be reasonable by the department for the second quarter 2014. Since the other quarters are within the same margin, a reasonable mind would conclude that the department should accept the other quarters as well. Keep in mind that the auditor who re-audited the records verbally told us that the tested records matched. The department would argue that second quarter 2018 was outside the audit period, and therefore it cannot set the basis for any determination. There are several flaws with their assertion. 1, the audit supervisor agreed to it. 2, the department does it routinely. Observation test is a perfect example of a test done outside of the audit period, and yet its result is projected to the audit period. It is also widely used among auditors because they claim records are more readily available and tend to be more complete. We can analyze the department's assertion from a different perspective. The department may have two separate and distinct theories in mind when they claim cost of goods inaccuracy. 1, purchases are inaccurate. 2, gross receipts are understated. Let me begin by saying that the department never examined the general ledger to understand the makeup of the purchases. Furthermore, the department could have obtained records from taxpayers' vendors, as they often do, but they didn't. Finally, they never claimed that gross receipts are understated. 3, the department will argue negative markup for taxable purchases. As stated earlier, the department never examined the makeup of the cost of goods for inclusion of non-food items such as supplies and others. Even if we assume that cost of goods sold does not include non-food purchases, The department is using 80% taxable segregations based on their first audit, which they concluded to be incorrect. If the department uses the re-audit findings, the result would be positive. The department will correctly assert that they arbitrarily made allowance for non-food items and others. However, this assertion contradicts their negative markup assertion, as their work schedule R-12A-1 shows a 13% markup. The department will argue that even at 65% rather than 80% taxable purchases, the markup would only be 17.87%. Well, they once again disapproved their own negative markup theory. Here is why. The department admitted that second quarter records matched. So let's use the second quarter. The taxable sales reported for the second quarter 2014 was $423,507. The taxable purchases for the second quarter 2014 was $362,681. The markup is roughly 17%. If we adjust the purchases by just 1%, which is less than what department allowed for theft, personal consumption, and timing differences, the markup would be 20%, which is far cry from negative 5%. Department will argue that WIC was irrelevant. As discussed earlier, department will assert WIC sales was irrelevant. Even as it may, it still does not relinquish their responsibility under the audit manual guideline to separately examine periods with significant disparity. Section 5, Summary. In summary, the department's findings are nothing but fruit of poisonous tree. Their findings are based on 2 incomplete months, which they admitted to be incomplete. On the other hand, taxpayers' findings are based on 3 full quarters. Chosen quarters were agreed to and tested by the department. The auditor who audited the records verbally stated that records provided matched. The department is on record that second quarter records matched. Taxpayer offered to test more quarters, but department declined. One thing is for sure, department cannot project an error rate that admitted to be unreliable, and moreover, project the error rate to quarters that it tested and found to be reliable. The department's actions were not in detail as required by the audit manual. The early periods where taxable ratios were lower was not tested as required by the audit manual. And lastly, the department's evidence failed the standard of proof required by the audit manual, as it did not outweigh the evidence opposed to it. I must also add that I recently learned that taxpayer was audited by the IRS for the tax years 2014 and 2015 and accepted the return as filed. So their system couldn't be that unreliable. See Exhibit 20. I'm done with my opening statement, Your Honor.
Thank you. Does Judge Long, do you have any questions for our appellant's representative at this time?
No questions, thanks.
And Judge Cho, do you have any questions for appellant's representative?
Not this time, thank you.
Okay. Before we transition to the department's combined opening and closing statement, I want to confirm with Mr. Taharan that he will not be calling any witnesses consistent with his May 5th, 2020 email and the May 1st, 2020 minutes and orders. Is that correct, Mr. Taharan?
Correct, Your Honor.
Thank you. Department, are you ready to begin your combined opening closing statement?
I am, Your Honor.
Thank you. Please proceed.
Good morning. I am Lisa Renati, hearing representative for the Department of Tax and Fee Administration. The department performed an audit of the appellant's sales and use tax account for the period of April 1st, 2012 through March 30th, 2015. During this period, the appellant operated 3 separate Circle K franchise convenience stores selling alcoholic beverages, tobacco, soda, sundry items, food, etc. The Euclid Street location is in the city of Anaheim, which is within the boundaries of Orange County. The North Loera Street location was also in the city of Anaheim. The North Loera Street location transferred to a related corporation with a separate seller's permit as of December 31st, 2014. And the last location was on Flower Street in the city of Bellflower, which is in Los Angeles County. This location was sold to another unrelated entity as of October 8, 2013. The department reviewed the appellant's sales tax returns and found the reported taxable percentage for the 3-year period of 2012 through year 2014 was about 61%. Exhibit B, page 30. The reported taxable percentage appears low for the business based on the department's experience. The department performed an examination of the appellant's point of sale system reports and noted that the sales are summarized under categories. The POS reports provided did not segregate between taxable and non-taxable charges. Exhibit D. The POS report simply listed a total sales amount for each category. For example, on Exhibit D, page 160, there is an entry for packaged beverages totaling $6,737.31. It is presumed this amount include all prepackaged beverages, including carbonated sodas, energy drinks, water, fruit juice, tea, and the like. Thus, taxable and non-taxable amounts are commingled. Total sales tax collected is listed as a separate line item at the end of the report, the POS report. See Exhibit D, page 163. The department reconciled the appellant's sales tax recorded per POS report and amounts reported for sales tax returns. An unexplained difference of over $8,000 in tax was found. Exhibit B, page 73. An analysis of the markup of costs using sales amounts reported to the department and cost of goods sold amounts for appellant's federal income tax returns was performed. The department used an estimated 80% taxable purchases to allocate the cost of goods sold amounts to taxable. The analysis revealed a combined negative markup of costs of negative 2.49% for the 2-year period of 2012 and 2013. Exhibit B, page 77. The department also noted that the exempt sales markup was very high at over 174% for the same 2-year period. A negative taxable markup means the appellant's cost of sales is greater than the amount received for the goods. That is, the items are sold at a price less than the appellant's cost. A negative markup on taxable items, coupled with very high markup on non-taxable items, indicates possible ringing up errors, where taxable items are rung up as non-taxable. Based on this analysis, the department performed indirect testing using a markup of cost audit methodology to compute audited taxable sales. The department performed separate shelf tests of the Euclid and Loera Street locations to compare the appellant's actual sales prices for September 2015 and corresponding cost amounts for purchase invoices for the same month. All testing included the unique purchases and selling prices noted for each location. For example, the appellant did not sell liquor at the North Loera Street location, but liquor was sold at the Euclid Street location. The individual percentage of purchases and markups of costs were affected by these types of differences. The department also transcribed all September 2015 purchase invoices so that separate self-test markups could be weighted by purchase category. The results of the test can be found on Exhibit B, page 40 and 61. The department noted that the resulting markup percentages were in line with those found in similar types of businesses. The shelf test markups were combined and weighted to compute an overall audited taxable markup of costs of 31.88% on Exhibit B, page 38. You can find that calculation. At the same time, the department also calculated a combined average taxable purchase percentage of about 80%. The appellant claimed the 80% purchase percentage computed using September 2015 purchase invoices was not indicative of the purchase percentages during the audit period. The department agreed to compute the weighted taxable purchase segregation using available purchase invoices for the period within the audit period. The appellant provided, and the department transcribed, purchase invoices for approximately 6 months. Specifically, for the Euclid Street location, the appellant provided purchase invoices for November 2014, December 2014, and September 2015. September 2015 purchase invoices were also provided for the Loera Street location. and combined purchase information for both Euclid and Loera locations was provided for the periods of April 2014, May 2014, and June 2014. The department computed an overall weighted taxable segregation percentage of 75.13%, which was accepted by the department. Exhibit B, page 72. The department applied the 75.13 audited taxable percentage to the appellant's claimed cost of goods sold per tax returns for years 2012 through 14. To account for the possible inclusion of supply items with the claimed cost of sale amount, the department reduced the cost of sale amount by an estimated 10%. Additional allowances for self-consumed merchandise at 2% and full fridge at 2% were also provided. The resulting net amount represents audited taxable purchases available for sale. The audited taxable shelf test percentage was applied to audited taxable purchases to calculate audited taxable measure, and a comparison of the amounts of reported amounts and audited amounts resulted in unexplained differences. To account for the understatement based on appellant's quarterly reporting basis, separate percentages of error were calculated for each year, using the understated amounts and corresponding reported amounts for each year. Because the cost of sale amounts for 2015 were not available, for first quarter 2015 rather, were not available, the department used the year 2014 error percentage and reported taxable sales for first quarter 2015 to calculate the understated sales. The appellant claims the purchase records used to compute the segregation percentages are incomplete and don't include small vendors. The appellant provided purchase summaries for second quarter 2018 and fourth quarter 2014 to support their claims. The second quarter 2018 amounts were not considered by the department because these periods are 3 years outside the audit period. The department's testing of purchases for September 2015, which is only 7 months after the audit period, showed an 80.08 taxable percentage for purchases. During the audit examination, the appellant claimed this achieved 80% taxable percentage was too high and was not representative of their purchases. So the department asked if the percentage for periods 7 months after the audit period are inaccurate, how would one conclude that the purchases for periods 3 years later would be more accurate? Regarding the appellant's fourth quarter 14 summaries, which can be found on Exhibit C, page 138 to 146, the department rejected these reports because complete purchase invoices were not provided to ensure the allocations were correct and accurate. The purchase segregation amounts are close to the department's audit amounts, and the estimated additional non-taxable amounts added for various vendors, such as Aldi, Walmart, Smart & Final, noted on Exhibit C, pages 140, 143, and 145, are not supported. Additionally, as regards estimates for Aldi, the department notes that Aldi did not operate in Southern California until 2016. So the addition of these amounts for 2014 is disingenuous. Accordingly, no adjustment is recommended to the audited taxable purchase segregation percentage. The appellant also claimed the department's audit calculations do not consider the additional exempt sales of food products through the federal WIC program. The appellant stopped participating in the WIC program at the beginning of the audit period. For the Euclid location, the program was terminated as of July 2nd, 2012. For the Bellflower location, the program was terminated on November 7th, 2013. See Exhibit C, page 136. And there is no evidence the Loera Street location participated in the program. The appellant has not provided substantive proof that more non-taxable items were purchased during these periods, and the appellant has not provided any voucher information from the program to support a great amount of non-taxable sales. A review of cost of goods sold for income tax returns shows no significant change in purchase amounts between 2012 and 2013. Therefore, without evidence to the contrary, the department presumes the appellant's WIC program participation was minimal, and these amounts would not materially affect the calculation of audited taxable sales. The appellant also contends the audited taxable purchase percentage is flawed because of an increase in purchases from November 2014 to December 2014. An almost $13.8 thousand increase in taxable purchases was noted between November 2014 and December 2014. The department transcribed all purchase information provided by the appellant and presumed the information provided was complete. A review of the segregation schedules shows that the additional taxable purchases is due to purchases of alcoholic beverages and taxable items from Core-Mark. An increase in purchases during November or December is not unusual for convenience stores as businesses frequently purchase more inventory for the holiday months. The same increase in purchasing can be found seasonally. The department reviewed total purchase amounts for the 6 separate months tested and notes that the total purchase amounts and taxable purchase amounts for November 2014 appear to be less than the other months. This indicates that November 2014 purchase information may be incomplete. See Exhibit B, page 39 and 72. Accordingly, no adjustment is recommended to the audited taxable purchase segregation. As regards the appellant's last-minute submission of Exhibit 20, the department reviewed the information and recommends no adjustments to the audit findings. First, the documents do not include any information regarding the scope of the examination by the Internal Revenue Service or other information regarding the records that were included in the review. Second, the audit findings of the IRS are not findings of the department. The department used a recognized audit methodology to compute audited taxable measure, which results in a fair and reasonable audit finding. The Department Schedule R12A1, which can be found on Exhibit B, page 37, includes the appellant's claimed year 2014 cost of goods sold amount obtained by the department from the Franchise Tax Board. The amount is $2,204,762. The reported gross sales per sales and use tax returns, excluding sales tax, was $2,389,177. Using these amounts, the reported gross sales markup is only 8.36%, which is very low. Additionally, if allowances are provided for supply, shrinkage, self-consumed, and only the taxable percentage purchases are considered, the reported taxable markup would only be about 13%. Yet the shelf test performed by the department shows that the appellant's taxable markup is much greater at 31.88%. Lastly, the appellant claims their POS system captures each sale and charges tax accordingly, and that these reports were used to report their taxable sales liability. The department notes that no POS system, including those with a barcode system, is infallible. The accuracy of the system depends on whether the items are correctly coded in the system. Additionally, if a cashier fails to scan all items sold or some other operator error occurs, then the POS system would not capture all transactions accurately. The department's markup of cost analysis using appellant's reported amounts showed a negative taxable markup of cost. This is evidence of understated taxable sales, and it is also evidence that the appellant's reports from their POS system used to report their taxable sales is unreliable. Additionally, appellant's Exhibit 16 includes detailed sales reports, which are extracted from the appellant's POS system on August 9, 2019. These detailed reports differ from the reports provided to the department per Exhibit D, page 162 to 167, which have an extraction date of July 13, 2015. If you look at appellant's Exhibit 16, pages 84 to 86, you will see recorded taxable sales for January, February, and March total $226,099. For the same quarter, the appellant reported $188,779 in taxable measure, Exhibit B, page 31. This is a difference of over $37,320. The department's audit findings for first quarter 2015 on Exhibit B, page 36, shows a difference of only $31,573 in understated taxable measure. This means the audit findings in the department are less than the actual sales of the appellant per their own exhibit. Accordingly, the department is confident the audit findings for the audit period are reasonable and fair and requests that the appellant's appeal be denied. This concludes my presentation. I'm available to answer any questions you may have.
This is Judge Aldrich again. Thank you. Judge Long, do you have any questions?
I do. In the briefing, the CTFA states that the taxpayer did not have a barcode scanner. Is that correct? Is that CTFA's position? Because it seems we've gotten some conflicting information today.
Here, give me one moment, please. This is Lisa Renati, please. Your Honor, can you point me to where you're finding this information?
Yeah. So the obviously appellant's attorney stated several times that they did have a barcode. However, the July 15th, 2019 brief, page 2, fourth line. Third line. Appellant's POS system in use during the audit period did not have a barcode system.
Okay, give me a second. I'm going to look at the audit report real quick. Your Honor, I looked at the audit report, and when that was composed, we were using the information available on the audit report, and our report did not include there was a barcode system. We did not include that into our report until we received the appellant's exhibit.
Okay, so to follow up, is it still your position that they didn't have a barcode, or is it now that they did have a barcode?
Well, and when we look at exhibit, department's exhibit, let me get the exact page for you. When I looked at exhibit B, page 9, which is the report of discussion by the principal tax auditor, the mention doesn't mention a barcode system. All the mention talked about was looking at the POS system, examining the POS system, and finding that items, they're saying categories it indicates the categories were rung up using the actual cash register. It doesn't indicate a barcode system was used. The appellant has provided information via their exhibit showing that purportedly a POS system with a barcode was used. So I don't have information other than the auditor does not mention, nor does the supervisor or the district principal auditor, that a barcode was used. So my presentation includes the information because I knew that because appellant's representative did bring up the barcode system.
Okay, thank you.
This is Judge Aldrich again. So I guess this is for appellant's representative, this question, but is it your assertion that appellant used Radiant as the POS system for each location? Mr. Taharan, are you?
That's my understanding, Your Honor.
Okay, and is that the only POS system that was used by appellant?
That is my understanding, yes.
I guess, is SSCS Passport a separate POS system from Radiant?
I don't know the answer to that, Your Honor.
Okay. Ms. Renati, do you have any insight as to whether or not Radiant and SSCS Passport are companion POS systems, or how they differ?
I do not.
Okay. Judge Cho, did you have any questions?
Hi, this is Judge Cho. Yeah, just a quick question for Mr. Tehran. The department brought up your Exhibit 16, I believe, which was the POS records, and they compared it to the reported amounts for the first quarter of 2015 and noted an understatement that roughly aligned with what they found using the markup method. Do you have a response to that?
Give me 1 second, Your Honor. Exhibit 16, you said?
Yes.
Okay. And what was exactly their assertion, Your Honor?
I believe it was the department added up your total sales for all 3 of those months that you have in Exhibit 16, and then they looked at your reported, not yours, but the taxpayers' reported total sales for the first quarter of 2015, and they found that Exhibit 16 actually adds up to a higher amount than the reported amount.
Yeah, because typically when they report or they prepare a sales tax return, they do not include lottery, and that's the difference.
May I interject, Your Honor?
This is Judge Cho. Sure, Mr. Renati, you can make a response.
Mr. Renati, the amounts I presented were the taxable sales amounts, not total sales amounts.
Thank you for the clarification. This is Judge Cho. Thank you for the clarification. Mr. Tehran, do you have a response to that? She was looking at total taxable sales, not total sales. I misspoke. I apologize.
If the department knows what was reported for that period, I'd be happy to do the math really fast, but top of my head, I don't have a number for you, sir.
This is Judge Cho. It's your Exhibit 8. If you look at your Exhibit number 8, I believe it's line 22 on the BOE 414M sales and use tax schedule. This is Judge Cho. Mr. Tehran, while you look for that information and formulate a response, I just have a quick question for Mr. Renati and the CDTFA. I know you mentioned it in your presentation, but I think I must have missed it. Look, would you mind explaining again one more time why there could be ringing up errors if they did use a barcode reader, or is that because you were under the impression that they did not have a barcode reader, Ms. Renati?
Yes, this is Lisa Renati. Hold on a second. I need to get everyone to mute. Okay, this is Lisa Renati. So the reason why, let me go back to that. Well, our first comment is that no POS system is infallible, that it all depends on how it's used, whether the items are coded correctly or within the records as taxable versus non-taxable. Also, cashiers can fail to ring up items that are taxable, leading to understated taxable items, or they can make sales with the cash register open. So all of those items would make a barcode system in place not necessarily record all the taxable sales that are due, which is why our testing and analysis is performed to see if the reported amounts are correct. In this case, the department used a basic markup of cost method, and using markup of cost based on the reported amounts, which are purportedly reported per the POS reports, showed a negative markup for year 2012 and year 2013. So a negative markup means they sold it for less than cost, which is not reasonable. Even if we were making adjustments based on all the different items, the markup would still be less than the audited markup we calculated. Therefore, we've impeached the taxpayers' records and their POS system and used the indirect audit methodology of the markup of cost.
This is Judge Cho. Thank you very much for the explanation. And Mr. Tehran, were you able to give us a response?
No, Your Honor. Right now, I do know, again, and I'd be happy to provide that, but back when I looked at it, and it's been a while, I do know that lottery was a factor, and redemptions was also a factor. Outside of that, right now it doesn't come to me. I'm blank on the point. But one thing I do want to comment, Your Honor, is this: all of these assertions they're making, it is made after the fact. One thing is for sure: the easiest thing for the department to have done is to do a half-a-day test, one-day observation test. They could have watched them ring and come to a conclusion that the POS system is unreliable. One of the other things that I do want to point out, it just comes to me when you guys brought
I'm sorry, this is Judge Cho. Mr. Tehran, I don't mean to cut you off. It's just that
That's okay.
it sounds like you're going to go into a rebuttal and not a response to my actual question, which is totally fine. But I think that should be saved for your final presentation. If there's no further response to my question, I'm okay with that, and I will thank you for your time and your presentation. I have no further questions.
Thank you, Your Honor.
All right. Mr. Tehran, would you like to make a final statement, a rebuttal to the department, or further address any of the questions we had?
Yes, I do. Let me begin with what I was about to say, and that is, and I don't remember exactly what page of their exhibits, but I think it is in their May 10 report, and it is part of my exhibit as well, where they said they sent the auditor for a detailed review. But if you take a look at the very same page that you were talking about, page 9, it does say that the auditor was sent for a cursory review. Even a cursory review, they would have learned that POS system has a barcode. Now, with respect to few things that Ms. Renati brought up, that these reports are combined, and that taxable and non-taxable items are perhaps commingled. Aside from that, there is no evidence to that. This report that is generated and given to the CPA, it's basically a summary report for the CPA to see how much tax was collected, what are the non-taxable sales items, so they can do the return. This is not the only report that POS can generate. Like I said, it does have limited capacity, but they could have been able to see ticket-by-ticket transactions. They could have been able to really examine whether the POS is capturing taxable and non-taxable correctly. That's one item. The other thing is that they keep going back to this negative margin. And what I did not hear from them is why are they averaging the results? It was noted to them, substantiated to the department, that the taxable sales follows the taxable purchases within margin of error. And yet there was no comment as to why you're averaging the results. You've done an audit. You did agree that the test basis was incomplete. That was the premise, that the audit was warranted according to the audit supervisor. You were proven that taxable purchases, when you look at it collectively for the entire period and compare it to the period that was reported, that the differences are within margin of error, and I did point out why there could be some differences. There was no reply to that. All I heard was that, hey, it shows negative markup. Well, the negative markup was the original theory, and they're sticking to it. Well, in fact, the revised report in it by itself, and they did admit that it doesn't. It actually does have at least 13%. My contention is almost 20% based on my reporting. So, but at the end of the day, they have a POS system, and the POS was never tested. The unreliability of POS, according to the department, is basically hyperbole. It's just nothing. There's no proof of it. They never tested it. Thank you, Your Honor.
This is Judge Aldrich again. We have your evidence and argument in the record. Is there anything else you would like to tell us before I submit the case?
No, Your Honor.
Okay. Thank you both for being flexible with the hearing format. I appreciate your time. We're ready to submit the case. The record is now closed. The judges will meet and decide the case based on the evidence and the arguments presented today. We will aim to send both parties a written decision no later than 100 days from today. And this concludes the hearing calendar for today. Thank you.
Thank you.
Thank you.
Thank you very much.